A very good day to Doctor and my friends. Today our group 2 is going to present the topic titled Budget and Management Control System. Let me introduce my group mates. First is Mohammad Aiman. Second, Adi Aziman. Third, Wanida. Fourth, myself Dhanaraj. Fifth, Muhammad Akmal. Sixth, Adiba. And lastly, Shakila. First and foremost, I am going to explain about control. A control system is a collection of formal and informal methods that help management achieve organization goals. Control also aid in efficiently leading people toward the achievement of an organization aim. It is difficult to establish a management control system in an environment of distributed accountability, re-engineer processes, and empowered work structures. Because a management control system is a set of interconnected structures that facilitates the processing of information for the purpose of assisting managers in coordinating the parts and achieving the purpose of an organization on a continuous basis. Control systems are a necessary part of every organization. Coordination, resource allocation, motivation, and performance measurement are all topics they cover. We moving on to concept of control. Control is a policy or procedure that enables an organization to ensure the achievement of its goal and objectives. Control is the process of establishing conditions that motivate an organization to achieve predetermined goals. Control is defined as the process of establishing a standard, receiving feedback on actual performance, and taking corrective action when actual performance deviates significantly from the planned performance. Furthermore, we are going to looking at control team. Control can also be defined in terms of two major types. First is domination, the second is information gathering. The exercise of power or influence over someone or something, or the state of being so controlled is referred as domination. To assert that one person has control over another, he or she must possess the ability to exert influence over another. Individuals can exert control over others through the use of power and authority in order to accomplish goals and objectives. Additionally, in order to exercise control, individuals must gather information to enable them to monitor and regulate activities in order to achieve the desired outcomes. In determining the whole meaning of control, both views or themes are critical. In the domains of cost management and control, the latter theme is desirable. Control in general refers to the methods by which a system alters its internal behavior in response to changes in its external environment. Following that, levels of controls. First is operational control. It is a process by which mid-level managers evaluate operating level employees. Managers will place a premium on detail and standard performance measure and will control employees through a management by exception (MBE) approach. MBE is a style of business management that focuses on identifying and resolving outliers. Managers, for example, only intervene when their employees fail to fulfill performance goals or when something goes wrong. Managers will only intervene if major variations from the expected outcome occur and will only require reporting if a deviation occurs. In other words, operational control is the process of delivering feedback on the efficiency of activities to employees and their managers. This type of control measures and compares short-term performance to short-run targets of standards. The second level of control is management control. It is a process by which upper-level executives evaluate the performance of mid-level executives. Managers will place a premium on long-term and strategy issue with action guided by a management by objective (MBO) philosophy. MBO is a form of management by results that aims to boost the organization's performance by clearly defining objectives that are agreed upon by both management and employees. Employees and managers will work together to set, record and monitor goals for a specific period of time. With MBO, motivation and commitment of employees will improve and the performance will increase drastically. That's all from me. Thank you. I will pass to my groupmate.
Assalamualaikum warahmatullahi wabarakatuh. My name is Adi Aziman bin Afendi, metric number 272686, and I will now continue my part, which is Management Control System. Management Control System, MCS, is basically a system of information processes which validates and verifies the physical processes in the organizations. MCS is part of the elements under Management Accounting and Control System, MACS. In general, the terms Management Accounting, MA, Management Accounting System, MAS, Management Control System, MCS, and Organizational Control, OC, are sometimes used interchangeably. Next, management controls are internal controls which are performed using management tools to help managers achieve results. They are not isolated measures, but are integral to organizational processes of planning, budgeting, management, accounting, and auditing. The control system is a systematic approach which determines whether managers are doing what they plan. It fits into the following universe of managerial activities: planning, what should we be doing? Organizing and motivating, how do we do it? Control, are we making progress? In general, controls are used to improve congruence of strategy and plans, accountability, integrity and ethical behavior, as well as effectiveness. There is also a specific set of controls which relate to the acquisition, use, and disposal of assets. The objective of all controls is to minimize risk, waste, and fraud. MCS is broader. As a system, MCS includes the MAS and other controls. In principle, the MCS includes developing rules, guidelines, procedures, limitations, or other controls in order to direct the employees and departments to do work and activities. In general, MCS is defined as the control which the management exercises over other managers. It is the process by which corporate level managers ensure that mid-level managers carry out organizational objectives and strategies efficiently and effectively. MCS is placed in between strategic control system and operational control system in the hierarchy. The definitions of MCS. Many gurus in control system give definition of MCS, even though they define the MCS differently, but the scope and meaning of MCS is similar. We adopt several definitions by the gurus in MCS as below. Firstly, Simons 1990. define MCS as the formalized procedures and systems that use information to maintain or alter patterns in organizational activities. In his definition, Simons, 1990, had not considered informal control processes such as group norms, socialization, and culture, whereas in reality, organizational activities may include goal-oriented activities as well as unanticipated activities emerging from unintended strategies. Meanwhile, Anthony, 1965, defined the MCS as the process by which the managers assure that the resources are obtained and used effectively and efficiently in the accomplishment of the organization's objectives. Anthony's 1965 definition only focuses on accounting-based control, which ignores the non-financial control. This definition has also been criticized for being too narrow as it separates management control from strategic control and operational control. MCS is actually linked between strategic control and operational control by ensuring the day-to-day tasks performed by employees and managers in the organization come together and the action is coordinated in assisting the overall goal attainment. Lastly, Lowe, 1971, defines MCS as a system of organizational information seeking and gathering, accountability, and feedback. This definition can be generalized as the whole process of MCS, where it gathers and uses the information, coordinate the process of planning and control decisions throughout the organizations, and to guide employees' behavior in achieving the goal. The goal is to improve the collective decision within an organization. MCS provides information that intended to assist managers in performing their jobs and to organizations in developing and maintaining viable patterns of behavior. The information provided by the MCS has evolved over the years, moving from one that focuses on the provision of more formal and financially quantifiable information to much broader scope of information, such as information related to non-financial matters. Lowe is also one of the first authors to define management control system, where he listed the following 4 reasons for the need for a planning and control system. The need for a planning and control system within a business organization flows from certain general characteristics of the nature of business enterprises, the chief of which are follows. Firstly, the enterprise has organizational objectives as distinct from the separable and individual ones of the members constituting the managerial coalition. Secondly, the managers of the subunits of the enterprise must necessarily be ambivalent in view of their own personal goals, as well as have a good deal of discretion in deciding how they should behave and in formulating their part of any overall plan to achieve organizational objectives. Thirdly, business situations are full of uncertainty, internally as well as externally to the business enterprise. Fourthly, there is a necessity to economize. In human endeavors, we are invariably concerned with an allocation of effort and resources so as to achieve a given set of objectives. That is all from me. I will now pass to my friend. Thank you.
Hi, good day everyone. I am Wanida Anak Perempuan Sang, my metric number 272784, and I will present the point 3, type of control. So there's 2 type of control system, which is informal control system and formal control system. So informal control system are unwritten, people-initiated mechanism that influence the behavior of individuals or group in a business unit. For example, group behavior, work cultures, and organizational norms and beliefs. Then the formal control system are laid down by the management in writing to influence the behavior of employees in achieving organization's goals, for example, rules and regulations, procedures, and work instructions. Here we can see the main types of control used, which is task control and result control. So task control is a process of developing standard procedures that employees are told to follow. This control monitors employees based on procedures guides, operating manual, job codifications, and reportings. However, for result control, it's a process of hiring qualified people to do whatever they think best to help the organizations achieve its objective, and using the control system to evaluate the resulting performance also can help the manager to address strategy of the organizations where employees are performing. In control system, we have three control mechanisms, which is control, bureaucracy, and markets. So control is informal social mechanism which is achieved through share and inculcate belief. This is because people of the same professions or culture are encouraged to pursue the same objective and hold the same ethic. Employee and organizations will have the same goal congruence and less supervision from the superior, so everybody knew what to do without being told consistently. Next, bureaucracy system is the use of rule, policy, written documentations, reward system, and there is specializations of authorities and hierarchy, and also other formal mechanisms to influence employee behavior and access performance. Bureaucracy system is a formal route of information and flow of power and needs a lot of sequential supervisions and consequently expand for proper control to be implemented. The third control mechanism is market system, which carry out by way of market mechanism. This means the decision making is based on market price information. This control is an attempt to achieve specified economic or political goals through the deliberate manipulations of factors such as demand, supply, pricing, transportation, or taxation. This type of control is less supervision compared to bureaucracy. To design the effective management control system (MCS), the criteria needed is MCS must permit clear links from plant organization's purpose to operational activities and be able to assist managers both when planning purpose and when controlling its achievement. Last one is MCS must enable a manager who so wish to ascertain exactly what output is expected of him and by whom. So there are three aspects of management control that need to consider when designing the MCS, which is who, what, and when. Who is interested party in evaluating the performance of organizations, and what is being evaluated, which means what is likely to happen. And then the last one is when the performance evaluations is done. Okay, next there are also elements important during design the MC, which is the best thing is plannings. Every start need a plans and coordinating, communications, decision making, and last but not least, evaluations. Okay, here we meet again components of MCS. Formal and informal control system, which I will go a little bit detailed. Formal control system require organizations to have a clear rule, procedures, policies, performance measures, incentive plans that relating to different managerial aspects. For example, management accounting system, quality system, information on cost, revenue, and income, and human resource system on recruitments, trainings, and absenteeism. Next, informal control system is always unwritten and implicit. The aspect is such as shared values, royalties, mutual commitments among members of organizations. This control does not show up on organizational charts, but help to make the organizations more conducive to work and enhance the employees' willingness to work for the organizations. Okay, now we will see the evaluating of MCS. To be effective, MCS should be closely aligned to organizations' strategies and goals, and be designed to fit organizations' structure and decision-making responsibility of individual managers. And the last one should motivate managers and employees. And want to know how? Next slide. So this is the MCS model, which is based on Simon level of control 1995. So business strategy is one of the internal control. So we have 4 things to focus, which is the core values, risks to be avoided, critical performance variables, and strategy uncertainties. So let's start with the belief system that determine the directions and concern the mission and visions of organizations. This level is to obtain the commitments to the ground purpose And the key underlying belief control is the core values of organizations and suggests that the organization's core value often emerge from the personal values of the founder and that they provide guidance for employee making decisions not covered by operating procedures. Second is boundary system will be used here to staking out the territory, which means this system constrain the search and ensure compliance with other codes of business conduct, strategic planning system, and asset acquisition systems. And this employee need to know which privacy sensitive client information they may and may not share because belief systems are designed to communicate risks to be avoided and to remove any ability to rationalize action that could expose the firm to undesirable level of risk. Third one is diagnostic system, which provide information when a system is in control or out of control. This level is to get the job done. And to operate the system, it is necessary to set goals, align performance measures, design incentive, review exception reports, and follow up significant exceptions so that can ensure everything runs smoothly. And the key strategic variable underlying in the system is critical success factor. Plus, at most situations, managers try to establish systems that they do not have to personally monitor on a regular basis. Last but not least, interactive system. This level is the positions for tomorrow, which is the system provide the information for communications between superiors and subordinates, and the information used by the superior to challenge the thinking and action plans of subordinates. So, in contrast to diagnostic control, which entails single-loop feedback, while interactive control is concerned with double-loop learning. So, the underlying strategic variable is strategic uncertainties. At the core of both systems are two common methods of control, which is task and result control. That's all from my part. Thank you.
Assalamualaikum and good day everyone. My name is Adipa Najatin Binti Muhammad Asmai, metric number 273128. So I will continue the presentation by explaining the budgets as planning and control tools. Budget is a tool that top management use to cascade strategy goals to operating levels. There are two tools in budgeting, which is planning and control. Planning is one of the important elements of budgeting work. It is the process of developing a budget for an organization, department, team, program, and project, and selecting a future action to accomplish the objective. Here are a few common elements of budget planning. First, strategic planning, which is the process of identifying goals, objectives, and plans to achieve objectives. Next, require estimates of revenue, costs, and risks to support decision making. And lastly is capital budget, which is a plan to invest in an organization to improve their future. Next, control. Control is a tool to measure performance against expectation to identify whether or not corrective action is required. Budgetary control system also provide a formal basis for monitoring the progress towards achieving objective and usually functions in a closed loop. Closed loop is starting with planning, then record actual transactions, and lastly reports against the plan and generates management response. Example of budgetary control system is standard costing, variance analysis, and MBE, which is management by exception. Next, I will explain about feedback and feed-forward process. Feedback is a tool involved in monitor past results to identify and correcting problems to the plan. Feedback is used when the previous controls, feed-forward and concurrent would cost too much or take too much time. Also, feedback refers to the process of adjusting future actions on the basis of information about the past performance. Example of feedback control is when a sales goal is set. The sales team work to reach the goal within 3 months. So at the end of the 3 months period, managers review the results and determine whether the sales goal was achieved. Next, feed-forward control is a mechanism in a system for preventing problems before they occur. It reacts to immediate or forthcoming dangers by making adjustments to the system in advance in order to cope with the problem on time. The predictions are made as to expected outputs. If these expectations deviate from desired results, control action is implemented to minimize these deviations. For example, cash budget. As we know, cash budget is to predict the inflow and outflow of the cash during period, right? And the budget may reveal an undesirable cash deficit. Because of this problem, certain adjustments may be made to overall plans, and a reworking of the cash budget shows that the problem is overcome. So the control is achieved ex ante before any deviation from objective actually occurs. Also, the activity of the planning is an example of feed-forward control. If the outcomes of the planning fall short, alternative solutions are considered as until a satisfactory set of outcomes is predicted.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Akmal Mohaimin bin Arifin. Nama matrik is 273041. Okay, what I going to explain is what if analysis. Okay, what if analysis is a project management process that evaluate different scenarios to predict their effect, both positive and negative, on the project objective. The outcome of the what if analysis is used to determine the flexibility of the schedule under the unexpected and adverse situation. What if scenario analysis is the process that estimating the expected value of a portfolio after a given period of time, assuming specific change in the value of the portfolio security or the key factor taking place, such as the change in the interest rate. This analysis explore the effect of alternative marketing, production, and selling strategies. What if analysis can improve the overall performance of your business by letting your plan for challenge and opportunity to securely meet your company growth objective. Budgeting is basically an adequate guess based on the past performance and apply to the future goals for a growing business. Through how a business has performed in the past, many provide line insight into how it will do when facing a new challenge. Considering the current pace of the business, challenge can arise quickly. Scenario planning can help companies to keep their budget on the track to achieve their goal. Scenario planning analyze possible situations and show how those challenges and opportunities can impact the organization budget and ability to achieve their strategic target. For the example that can be used in this situation is the farmer can use a scenario to predict likely outcome depending on the harvest will be good or bad, which is driven by the factors such as the weather and the pest. It helps them to forecast their sale but also their future investment. It also helps them to justify a bank lending them for a next harvest. Military institution use scenario planning in their operation to cope with any unlikely situation, anticipated and any consideration of the every event. In this case, scenario planning can mean the difference between life and death. The master budget is the primary financial planning mechanism for an organization and also provide the foundation for a traditional financial control system. More specifically, it is also comprehensive, integrated financial plan developed for a specific period of time. For example, a month, quarter, and a year. This is much broader concept than the first three types of the budgeting. The master budget include many appropriate budget, typically in the administrative and service area, as well as a flexible budget, a capital budget, and many more. The master budget has two major parts, including the operating budget and the financial budget. The operating budget begins with the sales budget and it ends with the budgeting income statement. The financial budget including the capital budget as well as the cash budget and budgeted balance sheet. There are many consequences associated with the budget master that need to be considered by management. The consequences and impact on the budget master basically involve uncertainty, behavior budgets, and a cost. For example, we secured a rate to the current pandemic, COVID-19, an organization need to respond to the contract needed. Therefore, building the set of the assumption is probably the best thing you can ever do to help you guide your organization in the long term. In order to simply and avoid such as negative consequences and impact, the following assumptions are made when preparing a master budget. The first one is sale price are constant during the budget period. Second one is variable cost per unit of output can be constant during the budget period. The third one is fixed costs are constant in total, and the final one is the sale mix is constant when the company sell more than one product. Those assumptions calculate the planning process by removing any of an economic complex. The analysis of change in an estimate used in a production plan is called sensitive analysis. Sensitive analysis is the idea of a process of selective varying a plan or a budget key estimation for a purpose of in identifying over what range addition option is preferred. Sensitive analysis enable planner to identify the estimate the critical for the decision under the consideration.
Good afternoon, doctor and everyone. My name is Shakila Anak Prabharatna Saminaidu with matrix number 282633. Today, I will be continuing the presentation with the last subtopic of this chapter, which is the behavioral aspects of the management, accounting, and control system. Many companies, businesses, organizations uses budget as a financial representation of their strategy. As we know for sure, to prepare a budget, it will often take a longer time than we expect. Not only that, it can bring arguments and disagreements. This is due to the factor that human factor is involved in the entire process. Therefore, we can predict that the budget often do not strive in a smooth progress. From this, we will wonder, how do an individual try to affect the budget, and in turn, how the budget affects the individual's behavior? We have to understand whether developing a budget for a family or budget for a small company or budget for major multinational company, it is important to be aware that the way of interaction between individuals is still the same. In terms of behavioral concern, two important areas are particularly important, which are the first one is designing the budget, and the second one will be influencing the budget process. Okay, designing the budget. To design a budget, where do you think the data planners receive their information or data to prepare the master budget and the supporting plans? How should budget be determined and who should be involved in the budgeting process? To understand this, we should know that there are three common methods of setting budgets, which are the first one is the authoritative budget, the second one will be the participative budget, and the third one will be the consultative budget. Authoritative budget. What is it? It's a budget that occurs when a superior simply informs subordinates on what their budget will be like without requesting any input. To be more clear, it is to be said when an upper management has already decided the budget that is enough for each lower management without asking their opinions whether they have enough or not to tackle. One benefit of this authoritative budgeting is that the process is straightforward and efficient, whereby it allows superior to assign budgets and promote overall coordination among subunits in the organization because it is done only from a single perspective. Managers who want to impose a budget in a top-down manner often want control and have authorization aspects in their personalities. Moving on, when there is benefit, we also do have disadvantages of this authoritative budgeting, which is superior usually have less information about the process of being budgeted than the subordinates or the lower management. The superior will specify the goals to the subordinates, but the subordinate itself will have high aspiration of their goals, which may lead them to this frustration. The second disadvantage is that the lack of motivation and commitment to the budgeted goals. This is due to lack of employee participation in the planning of the budget process. The second common method of setting budget is the participative budget. This budgeting is an approach that uses joint decision making process in which all parties agree about setting the budget targets. Previously in the authoritative budgeting, only seniors involved, but in this participative budgeting, it allows employees to participate in the decision of the budgeting process, which provides an opportunity for them to use the knowledge or the information which they have developed through their training or experience on the job to jointly set their goal and negotiate the level of their budget. Since employees participate, it has bring benefits to them such as they may have greater feelings of commitment to the budget and therefore a higher level of motivation to attain goals and keep within the budget. As a result, when an organization discusses the budget jointly, subordinates or their lower management, indirectly they will reveal the information and their level of aspiration to their management, which can then be implemented in the planning process. Okay, let's move on. The third common method is the consultative budgeting. In this budgeting, managers actually ask their subordinates to discuss their ideas about the budget. But in the end, the manager is the only one who alone decides the final budget. For many large companies or organizations, the participation of all the employees is impracticable. Therefore, this consultation is known as the norm. An alternative of consultative form of budgeting may occur when subordinates actually believe that their ideas or their inputs will be used directly in setting the budget, but on the other side, the superior really has no intention to consider their ideas. By doing so, it could bring debilitating effects whereby less motivating to the subordinates if they find out that their superior was very insincere. Okay, research has shown that the most motivating type of budget are those that are tight, which are those with targets that are recognized as challenging but are achievable. Certain companies has implemented what are known as stretch targets. Stretch targets or stretch goals are significantly higher than prior goals and usually require a massive increase in goal during the next budgeting period. In other words, stretch budgeting means that the organization or company will try to reach a much higher goal with the current budgeting. The logic is that stretch targets push an organization to its limit, whereby only in this manner companies or organizations completely reevaluate the ways in which they produce their products and services. On the other hand, some employees might get frustrated and quit their job due to the stressful environment to achieve the stretch targets. Employees may be able to push themselves through a short run to meet the stretch target, but they might not be able to undergo a high level of effort in every upcoming budgeting. Therefore, organizations should provide sufficient resources and come up with plans so that employees believe that stretch targets are achievable. Moving on, the second interacting area that is important is influencing the budgeting process. Clearly to be said, the budgeting process is neither simple nor mechanical. It points out the need for interaction about resource allocation, organizational goals, and human motivation and performance. In large organizations as families, budget represent the outcome of negotiation among individuals. Certain individuals will also do all they can to increase the size of the budget. This is because they believe that the target budget is a symbol of power and control. Budget is used as a tool for planning, coordinating, and resource allocation. Budgets serve to measure performance and serve ultimately to control and influence the behavior. Many managers have their incentive and compensation tied directly to the budget and goal achievement. Due to the incentives and compensation are tied directly to the budget, some managers will engage in bad behavior to their organization whereby they will get engaged in budgeting games in which they attempt to manipulate information and targets to achieve a high bonus as possible. One well-known way that managers engage in budgeting games is through the participation process. This is because, as previously I've explained, participation process involves all employees, either the senior management or the lower management, involved in the process of planning the budgeting. Therefore, employees' participation gives them the power to influence the budget in ways that are not necessarily in the best interest of the company.
My name is Muhammad Aiman bin Amir, number matric 272125. Today I will continue the presentation in topic 3 with budget slack. Budget slack have been created by requiring excess resources of distorting performance information. By creating the budget slack, they will find it much easier to meet and exceed their budgeted objective. In some reason, several organizations have their devised own method to decrease the amount of the budget slack. Next, we go to the benefit associated with the traditional budgeting. First is a major formal way to translate objective into the specific plan and task. It also be important for the medium of the communication. It helps to achieve the coordination between the various departments and functions. It also involves of all levels of manager. We start with the top one, middle one, to the lowest one. And the advantages is also save the management time. The performance of the company itself will be systematically reported and monitored. And the last one, the systematically monitoring of result compared to the plan. At the same time, the company will also face the problem from the budgeting tradition. There are three main problems that will be faced by the company. First, competitive strategy is rarely strategy focused and often contradictory, and concentrate on the cost reduction itself rather than value creation of the company. Is constraint of responsiveness and also flexibility, and it also will add little value, but at the same time it tends to be bureaucratically and discourage for a creative thinking. Secondly, we go to the organizational capacities. It strengthens vertical command and control. It do not reflect of the imagined network structure that organization are adopting, and it refers departmental barrier rather than encourage knowledge sharing and make people feel undervalued. The last one, we go to the business process. The time consuming and is very costly. Developed and updated is too infrequently, usually annually. It based on unsupported assumption and also is encourage the gaming and dysfunctional behavior. It's all from me. Thank you.